Hello traders, Gary Wagner here, approximately 2 o'clock in Honolulu, 7 o'clock in New York. It is Tuesday, 5th day of January, 2021, and this is the Daily Report for Gold and Silver. We have a continuation of the rally which really began right before Christmas but took off yesterday with a $50 move to the upside in gold. Although today's move was moderate, it nonetheless is another important piece to the puzzle, indicating that we should see higher pricing in gold and silver continue at least throughout this quarter. We'll talk about that. We'll look at GLD and SLV in detail, but first to the price board. Although gold scored moderate gains, especially when compared to yesterday's $50 rise, it was still significant and still gave us more technical confirmation that gold prices are headed higher. Currently, we have February gold futures at $1953.70. That's up $7.10 on the day, about 0.4%. When we look at spot pricing, that is currently at $1949.60. And then when we look at silver, that's trading up about 1.25%, a gain of about 34 cents at $27.70. And we are today going to focus on the two ETFs that we're involved in and look at some charts. But in terms of pricing structure, the Spider Gold Trust is at $182.87, up 54 cents per share, and SLV gained about 1.26% today at $25.67. Now, all of that was aided with dollar weakness, which lost 0.4%, is well below 90, and I believe is destined to trade near 88 before this correction concludes. And then lastly, Bitcoin continues to astound the financial markets, gaining $2,600 per coin today. That's over an 8% rise, with a single cryptocurrency Bitcoin now valued at $34,155. Let's take a look at our current charts. Traders, as promised today, I do want to look at some detailed charts of GLD and SLV. But before we do that, I'm compelled to take a look at the dollar, because the dollar continues to drop. Today's drop was only about 0.5%. We're looking at a long-term monthly chart, but the fact of the matter is, once it broke through the 61.8% retracement level, the next real level of any kind of technical support doesn't come in until about 87.33. You can see that based on this low here, and you can see that to some degree on this series of highs here. I do believe that we will see it at least come and test the 50% retracement, and depending on how long the pandemic takes to run its course, we could see it go as low, I believe, as 83. Of course, lower dollar means higher gold and silver. So let's take a look at GLD and SLV. Traders, when looking at the ETFs like GLD and SLV, I prefer to look at much longer term charts. We're going to start with a monthly chart that gives us absolutely the big picture, so to speak, of how it's been trading and where it was when we were at our all-time record high prior to this, which occurred middle of 2011, and that, of course, is this circled area here. We had a long and protracted correction the same way that gold did, which really concluded at the beginning of 2016, end of 2015. We had a market move where we had a couple of peaks and valleys, but by the time we got to October of 2019, that would be the bottom and the last time we would look at pricing that was right around $110 per share. This references the all-time record high that was achieved when gold ran to 2088, the correction that followed. This, of course, is last month's action, December, and we can see that we absolutely have a gap between last month and this month, as we are currently trading at 182.87. And traders, if you recall, we put this position on the 17th, and the price point that we entered was approximately 174.77 per share. We've got roughly $4 to $5 of profit in there. And in terms of where I believe that we could see GLD go by the second quarter of this year is to once again compete with these prices up at around 195, because as I said, I absolutely believe that we will take out the former record high and replace it with a higher high than we have seen. We could get some peaks and valleys along the way, but in terms of actual resistance levels, we do have a little bit of resistance that might come in at about 187 per share. That tells me that if we break through the 187, we will quickly see it rise to as high as 195. And traders, we are looking at SLV representing silver. Each share is equal to approximately 1 ounce. We can see that the highs that came in recently, and they came in at approximately 27 and change, that's right up here, corresponded to when silver traded to about $30 in the futures market. And traders, one of the more interesting aspects when we look at gold and compare it to silver is the fact that when silver hit its all-time record high, we never really competed with that. The highest we got was roughly $30 in terms of the ETF. It was about $28. So in terms of levels of resistance that we would look at, we see that as this market came down, when we draw a line across, there is some reason to see potential resistance, but real resistance, in my opinion, does not come in till about $34, and that represents about $36 per ounce. Above that is this top here, and this top here comes in roughly at $37, and then the final level of major resistance would occur at approximately $43. If we see SLV go to this price, silver futures probably achieved $50 per ounce once again. Maintain your long position in gold and silver futures. Maintain your positions in SLV as well as GLD. And traders, lastly, I do want to revisit my upside target, and this is a very, very long-term study. It is done with monthly candlesticks, and therefore the Fibonacci extensions are going to be a much wider range. It really begins in about 2000 when gold was trading at roughly $250 up to the first record top at $1,919. Then it takes our correction to the lowest trading point from the highs that were achieved back in mid-2011, which came in roughly at 1030, and then it projects this final fifth wave. Now, we have already pretty much matched the 0.618% extension. We can see that right here when it came in at 2088, and it is for that reason that my target is utilizing the 78% retracement, which comes in at 2346. That's not to say this will be a linear line up. Again, I expect it to be a series of waves, a series of total of 5, the third being the longest, a fourth, and a concluding fifth. Following that, we should enter some sort of a correction, which could look something like an A, a B, and then our final C. If the parameters that drove the market to these highs are still prevalent in the market, we can expect this pattern to repeat itself. If the market scenario and market sentiment shift from bullish to bearish, you would then go into a bear count. But we're certainly not at that point yet to even discuss it, and I do believe that this is achievable, if not by the second quarter, by the end of this year. But I am shooting for the second quarter. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.